Good morning, afternoon or evening depending on where you are in the world watching this right now, and welcome back to another video on my investment portfolio channel. In this video we're going to take a look at my top winners as well as my top losers and see why they are where they are. We'll also be touching on the Tesla 5-to-1 stock split. As well as that, we'll be looking at what I've done with my portfolio, and I'll also be talking about the recent battle going on between Epic Games, the creators of Fortnite, and Apple. But before all of that, let's take a glance at my pies. This is probably my favorite screen to look at because I can kind of gauge at how well or poorly the different sectors of my portfolio are performing against my expectations. I don't really have too much to say on these. It's just a nice way to view which parts are doing well and whatnot, and at the moment the performance of these are there or thereabouts meeting my expectations in terms of the best and the worst sectors of performance. But anyway, going back to the main parts of my portfolio. So over the last week, I've begun a process to rebalance my portfolio by attempting to make sure that each stock has an equal weighting in the respective sections. So for example, my dividend stocks, if I have 20 instruments there, I want each one to make up 5%. And with the pies, it's quite simple to do that, but of course we are yet to receive functionality to include already existing holdings into pies, so I've taken it upon myself to do it manually. It will roughly take up to 4 weeks because I felt like by doing it all at once would just drastically mess up my method of dollar cost averaging. So I've spread out my calculations over for this month, and this kind of explains why my return looks smaller than usual, and it will probably get smaller and smaller as I continue to rebalance. But as you know, this is a long-term portfolio and blah blah blah. I won't bore you with the phrases and sentences that you've all heard before, but you get the point. Aside from this, given that I invested like just before the market crashed, I think I'm doing relatively well in terms of my return, so yeah, I can't complain too much. Anyway, let's dive away from that and look at some of the biggest losers this week, starting off with Uber. So Uber for me is in my risky part of my portfolio because I think they have potential to be a great car riding service as well as a food delivery service, but it seems as if the way they conduct business right now is not optimal at the moment. We can see this week that they fell around 9%, and I think the main reason for this was due to the fall in the number of rides in its recent quarter, which is understandable given the environment that we're in. But the silver lining in all of this is that their bookings with their Uber Eats business has doubled. And it's kind of clear to see that this part of their business is kind of like a hedge. So if their car riding part of the business is suffering, at least they have their food delivery service that they can potentially rest on in order to keep their numbers afloat. So I think another reason why Uber has fallen so much this week is around the legislation of how they classify the people that work for them. So at the moment they're classified as independent contractors, and people are wanting to change that to employees, and that means Uber would need to provide the people that work for them employment protections. So this includes things like paid holidays and minimum wage, and the Uber CEO has actually come out to say that if this does happen in California, then they'll probably have to shut down their business there because that requires such a drastic change in the business model. I'm guessing that they won't be able to handle that at this given moment anyway. So yeah, I think that's why one of the main reasons at least why Uber fell so much this week. But yeah, still in my risky part of my portfolio, and I do think that they do have the potential to grow. They just need to sort out their business a bit better. So coming on to my top loser this week, we have Cisco Systems. So the maker of computer networking equipment beat analyst estimates with their earnings, but provided a bleak forecast signaling that the difficult situation stemming from COVID-19 has not completely vanished. It is still affecting them, especially in their commercial business. Their customers are hesitant with their purchasing decisions, and as a result they're trying to generate more liquidity by cutting costs in terms of putting people into early retirement or even making people redundant. They also mentioned that they are expecting revenues to decline between 9 and 11%, and their EPS falling in between 69 and 71 cents, which is drastically below the analyst estimates of 76 cents. So tough times ahead, it seems like, for Cisco, but I'm sure once this whole situation is over, like many other businesses, their finances and numbers will return back to normal and a stable state. So moving on to our top winners this week, we have Tesla and we also have Digital Turbine with percentage increases in the 9 to 13% range. If we start off with Tesla, you can see that they've gone up 13.5% this week. So they announced on Tuesday evening that they were going to participate in a 5-to-1 stock split, which sent prices climbing with no real change to the fundamentals of the business. This stock split will allow more people to obtain shares in the company at cheaper prices. Actually, I shouldn't say cheaper prices, I should probably say post-split prices, because it still holds the same value but the overall cost has just been divided up. But if you're already investing on our platform with fractional shares, this really doesn't make much of a difference for you. But for those who aren't, this provides an opportunity to be involved in this company. From Tesla's perspective, I don't see any real value in doing this other than to bump up the share price in the short term. So I'm not really sure how this one was planned out. Maybe they wanted to take advantage of all the young people in quarantine, now classified as quote unquote Robinhood traders, to make the company worth more. I don't know. We'll see what happens. But another reason that they've gone up this week, especially during the latter parts of the week, was due to 2 analyst upgrades, one from Morgan Stanley and the other one from Bank of America, citing that Tesla's dominance in the long run will remain powerful. So now moving on to Digital Turbine. I realized that it does look like I have a lot of stocks in my portfolio. Well, I do, but overall I would say I have about 40 main stocks, and the rest of them are ETFs or risky stocks that I don't really pay too much attention to. I just put money into them in case, one of them blows up. But the main focus of my portfolio, I have about 40 stocks, so don't get too worried about me. So yeah, moving on to Digital Turbine, which I'm sure not a lot of people know about. They've gone up 9.5% this week, and for the month they are on the borderline of a 100% gain. Now this stock has been doing extremely well since it beat its first quarter earnings, which I think they reported, I think it was last week or 2 weeks ago. And they also provided a positive outlook for the second quarter. So I think they're still riding on the coattails of that information, and it seems like the effects of COVID are having very little effect here. And if I have piqued your interest with just this small piece of information, I would recommend that you go check them out, because the general numbers around this company are actually salivating, and if they're going to beat second quarter estimates of this as they've suggested, this stock will only continue to grow up here. But yeah, not too much news around that. It seems like they're still on the high of beating their earnings, and more people are beginning to buy into them. So yeah, those were my top winners and top losers this week. So let's get into the juicy part of this video, which is the Epic versus Apple beef. So let me just quickly summarize what's going on here between Epic and Apple. So Epic Games, the creators of Fortnite, are not too happy with the way Apple is conducting their business in the way of taking 30% of developer revenue. In order to oppose this, Epic decided to create another method for people to purchase in-app items by offering a cheaper alternative, and thus undercutting Apple on their own platform. This is Apple's platform. So take a look at this. They gave the option for consumers to choose what way they would like to purchase in-app goods. I mean, more times than not, you would think that they'd go with the alternative payment method that Epic has created because, well, it just costs less money. But this is just a blatant violation of Apple's policy, because any payment that's done through their system has to go through their own payment solution. And I think this is mainly to maintain firm security and also for Apple to take out their own cut. So what did Apple do? They removed the Fortnite app from their app store and released a statement explaining why, which basically said that they violated policy, blah blah blah. But Fortnite were ready. They were ready. Of course they were ready. It's like when you send for someone, you're expecting them to fire back, so you have to have something in your locker to retaliate as soon as they fire their shots. And what Fortnite did was to release an in-game video essentially mocking the Apple event, where they unveiled the Mac computer back in 1984. This started this whole social media campaign, and this video essentially tried to symbolize Apple as a monopoly. And Epic Games even went a step further to sue them on those terms, that they use unfair anti-competitive action in order to unlawfully retain a monopoly. Listen, in my opinion, this is a much bigger battle than just Apple. I'm pretty sure most of these tech companies where developers release their games, etc., charge near or about the same commission of 30% to have your software on their system. And in addition to this, other subscription services like YouTube, in fact, don't they take around 45% of advertised commission? I mean, I'm nowhere close to being monetized, so I don't pay too much attention to those figures, but isn't that the figure there or thereabouts? Or even Twitch, rather, owned by Amazon, they accumulate up to 50% in commission of Twitch subscription revenue. So it's not just Apple who I think participate in these quote-unquote oppressive rates, but because they're one of, or even the largest company in the world, they're kind of the main focal point for all of this. Look, I can understand the position Epic are coming from, but this is the price that you have to pay in order to be part of the Apple ecosystem. It's their platform. Sure, you can challenge them to change things and be a voice for change, but you can't just come into a system that someone has allowed you to come into and start making your own rules. It just doesn't work like that. So I don't really see how Epic are trying to do what they're trying to do. It just doesn't make any sense to me. I think there are better ways to try and figure this out instead of trying to illegally imposing your undercut prices on someone else's payment system. So I think if Epic and Apple just try and talk things out, I'm sure they can come to a resolution. But what Epic Games are doing now, I don't think it's right or would work in any type of way. However, I'm going to wrap things up there. Thank you for watching, and I'll catch you guys in the next one.